Welcome to Newsbeacon, your trusted source for breaking headlines, global insights, and sharp analysis from around the world. If you're new here, don't forget to hit that subscribe button and turn on notifications so you never miss an update. For decades, a humble legume, the soybean, has quietly shaped the destinies of nations, its golden seeds holding far more power than their size suggests. This unassuming crop has become a vital link between the world's two largest economies, the United States and China, forging connections that reach far beyond the farm. In the United States, soybeans are more than just a crop. They're a lifeline. They support not only individual farmers but entire rural communities, fueling local economies and sustaining generations of families across the heartland. Every autumn, as the leaves turn and the air grows crisp, American farmers harvest millions of tons of soybeans. Much of this bounty is destined for distant shores, with China as the largest and most important customer. In China, soybeans are nothing short of essential. They feed vast herds of livestock, helping to meet the nation's growing appetite for pork, chicken, and beef. They're also pressed into cooking oil, a staple in kitchens from bustling cities to rural villages, nourishing over 1 billion people every day. As China's middle class expanded and incomes rose, so did the demand for meat, and with it, the need for American soybeans. The soybean became a symbol of prosperity and progress, quietly fueling a dietary revolution. For more than 40 years, this trade relationship stood as a model of global cooperation. American farmers planned their planting and harvests around Chinese demand, while Chinese businesses relied on the steady supply from across the Pacific. But even the strongest bonds can be tested. Today, the once stable partnership is under strain, and the future of this golden bean hangs in the balance. The steady flow of soybeans from American farms to Chinese ports has slowed to a trickle. In its place, ships from Brazil and Argentina now fill the gap, redrawing the map of global agriculture. This dramatic shift isn't the result of poor harvests or changing tastes. Instead, it's driven by tariffs, political maneuvering, and the growing rivalry between two global superpowers. The story of the soybean has become a story of economic competition and uncertainty, leaving American farmers caught in the crossfire of a conflict far bigger than their fields. The unraveling began in 2018, a year that would mark a turning point for global trade, and for the relationship between the world's two largest economies. That's when a trade war erupted between the US and China, sending shockwaves through international markets and upending long-standing partnerships. Soybeans, America's top agricultural export to China, became a prime target for Chinese retaliation. For decades, US farmers had relied on China as their most important customer, shipping millions of tons of soybeans across the Pacific each year. Beijing's tariffs struck at the US heartland, turning a trade dispute into a political weapon. The impact was immediate and deeply personal for thousands of American farm families who suddenly faced uncertainty about their livelihoods. In 2025, new tensions led to another round of tariffs, 10% on all Chinese goods from the US, and a swift 10% tariff on US soybeans in return. The tit-for-tat measures escalated the conflict, making it clear that neither side was willing to back down. These tariffs slammed the door on what remained of the once thriving trade. Shipments slowed to a trickle, and grain elevators that once bustled with activity now stood eerily quiet. Despite several rounds of talks and high-stakes negotiations, the tariffs remain in place, making US soybeans too expensive for Chinese buyers. The uncertainty has sent prices tumbling and left both sides at an impasse. The trust built over 4 decades has eroded, and Chinese importers now see the US as a risky partner. Years of cooperation and mutual benefit have been replaced by suspicion and caution. Instead, they're forging new relationships with other suppliers, especially Brazil. Brazilian farmers have seized the opportunity, ramping up production to meet China's growing demand. The great uncoupling is no longer a threat, it's reality. Trade routes that once connected the US and China are now shifting south, redrawing the map of global agriculture. At its peak, China bought over 60% of US soybean exports. Those shipments fueled not just American farms but entire rural communities. Now that share is plummeting. The decline is visible in empty grain elevators, unharvested fields, and the growing anxiety among US farmers. China isn't just diversifying, it's replacing the US as its main supplier. New trade agreements and investments are cementing Brazil's role as China's go-to source for soybeans. American farmers are left wondering if their biggest customer will ever return, or if this chapter marks the end of an era for US agriculture. The consequences of these trade tensions are likely to echo for years to come. At the heart of China's shift is a simple price problem. Tariffs have made U.S. soybeans about 20% more expensive than those from South America. In a business where margins are razor-thin, that's a deal-breaker. Chinese crushers, under pressure to keep costs low, have turned to Brazil for cheaper beans. In July 2025, Brazil supplied nearly 90% of China's soybean imports, the U.S. less than 4%. The tariffs have priced American farmers out of their largest market. Normally, Chinese buyers would be placing big orders for the U.S. harvest, but this year, there's silence. New crop sales to China are virtually non-existent, sending U.S. soybean prices tumbling. Futures markets are in turmoil and confidence across the Farm Belt is shaken. Trade policy isn't just politics, it's reshaping markets and livelihoods. Until the price gap closes, U.S. soybeans are locked out of China. As the U.S.-China trade door closed, Brazil's opened wide. Years of investment and expansion positioned Brazil to fill the void left by the U.S. In 2024-25, Brazil produced 42% more soybeans than the U.S., exporting over 112 million metric tons, much of it to China. Brazil's climate allows for near year-round production, offering China a steady, reliable supply. Chinese companies have invested billions in Brazilian infrastructure, ports, railways, storage to secure this supply chain. Nearly 70% of China's soybean imports now come from Brazil. This isn't a temporary shift, it's a new global reality. Brazil has captured the market share once held by the U.S., becoming the world's soybean superpower. The global agricultural map has been redrawn. Brazil's dominance isn't just luck, it's built on real advantages. Lower land and seed costs let Brazilian farmers sell at more competitive prices. A weaker currency makes their exports even cheaper for buyers using U.S. dollars. Brazil's vast, expandable farmland allows for continuous growth, unlike the U.S. Chinese investment in infrastructure has streamlined the supply chain, cutting costs further. The Brazil-China partnership is now one of the most efficient in the world. These factors have cemented Brazil as China's supplier of choice. For U.S. farmers, this isn't just economics, it's survival. Every season they put everything on the line, investing not just money but their hopes, their family's future, and the legacy of generations before them. Now that way of life is under threat like never before. The collapse of Chinese demand comes just as a bumper crop is about to be harvested, leaving farmers with mountains of unsold beans. Silos are overflowing, and storage facilities are packed to the brim with nowhere left to put the harvest. Soybean prices have plunged, falling well below the cost of production. For many, every bushel sold means losing money, and the market offers little hope of a quick rebound. Many farmers now face selling at a loss, unable to repay loans taken out for seed, fertilizer and fuel. The bills keep piling up, and the value of their hard work seems to vanish overnight. The financial stress is pushing some to the brink. Forced sales, foreclosures and bankruptcies are rising. For families who have farmed the same land for decades, losing it is more than a financial blow. It's a loss of identity and heritage. The emotional toll is immense, with entire communities feeling the strain. Anxiety and uncertainty ripple through rural towns, where neighbors gather to share worries and search for answers. Billions in lost income mean less money for local businesses, schools, and hospitals. As farm families tighten their belts, the effects are felt everywhere, from shuttered shops to shrinking school budgets and struggling clinics. The U.S. is producing a record crop, but instead of celebration, there's dread. Fields that should represent prosperity now stand as reminders of uncertainty and risk. The soybeans piling up in silos are a symbol of lost opportunity. Each bin filled to capacity is a stark reminder of deals that never happened and markets that have vanished. The trade war's human cost is measured in broken dreams and rural hardship. Abandoned homes and idle machinery tell the story of families forced to walk away from everything they've built. American farmers are paying the price for a global standoff. Their resilience is being tested, and the future of rural America hangs in the balance. As harvest nears, uncertainty hangs over the Midwest. In a normal year, Chinese orders would fill the books. Now, they're empty. Only 10% of the expected crop is sold in advance, the second lowest in 2 decades. China, once the top buyer, has vanished from the market. Farmers are forced to store their beans, hoping for better prices, but storage is costly and risky. With a massive harvest, storage will fill up fast, forcing some to sell at rock-bottom prices. President Trump's public pleas for China to buy more soybeans have gone unanswered. Chinese buyers are locking in contracts with Brazil instead. For U.S. farmers, the 2025 harvest is a season of anxiety, not fulfillment. Facing disaster, U.S. farmers are demanding action from Washington. The American Soybean Association has urged President Trump to end the trade dispute and secure a deal with China. They want more than promises. They want binding commitments and the removal of crippling tariffs. Memories of past broken deals have left farmers wary. This time, they want real guarantees. Industry leaders stress the generational importance of the U.S.-China partnership and the urgent need for resolution before harvest. There's hope that diplomacy can prevail, but patience is running thin. Farmers are resilient, but they're running out of time. The decisions made in Washington and Beijing have immediate, life-changing consequences for rural America. Farmers didn't start this trade war, but they're bearing the brunt. Their future, and that of their communities, hangs in the balance. The soybean crisis is a lesson in global interconnection. Decisions in Washington and Beijing ripple through small towns and rural communities. What began as a tariff dispute has redrawn trade maps and changed millions of lives. American farmers' hardship is a stark reminder of their vulnerability to global forces. For China, diversifying supply has become a strategic priority, with Brazil now the main partner. The crisis shows how a single tariff can trigger a chain reaction across continents. In our connected world, global events are always local.